Good morning. Just a short summary of what I've learned at the World Economic Forum in Davos over the last 2-3 days. I've done about 20 to 25 bilaterals and attended many sessions and group meetings. 6 points I would summarize. The first one is US election. It's the key elephant in the room. Probably the world will be decided in the near future by whoever will be the US president. The biggest risk is an irrational Trump leading the White House because it's perceived by most players as someone that will have a revenge agenda rather than a positive for the world agenda. Markets, it depends. Last time he came in, he cut taxes and basically spent more. He lost debt, also because typically he hasn't paid him back himself. And as a result, this could weaken further the dollar. And there could be an implication on inflation too. Depends on who then will be appointed at the Fed. Many moving parts. For sure, the US dollar supremacy will be put at risk. But in the short term, it could be positive. Secondly, war in Ukraine. Sadly, the Ukrainian front internally, it's splitting, is weakening. There is tension between Zelensky and the head of the armed forces. There are accusations of basically abuse of all the military aid which has been given, and this is creating a weak, united front in Ukraine at a time of geopolitical risk and election in the US. The positive outcome will be a solution. Negative will be further tension, unclear, and hence to be monitored. Point number 3, Europe. Unfortunately, no growth, no vision, no unity. Europe used to be a dominant economic force, despite no military political relevance, at least could speak for one of the largest markets. But over the last 10-15 years, the US has doubled its GDP, Europe remained flat, and as a result, today the average American is twice as rich as the European. Post-Brexit, it's even more divided and smaller, and hence it cannot exercise the economic influence it had. China and US not only have military, political, but also much more economic power. So Europe is getting squeezed, and it's not clear how we'll get out. At the same time, let's remember, you have war in the Middle East, you have war in Ukraine and Russia. These are very close to the European shores, and hence this is adding tension in terms of migration and potential of rise of populism. So Europe will have to make a decision. Macron so far has been seen as the only leader, also because it's a president with full power, and the rest of Europe lagging behind in terms of strategy. Germany certainly, with the wrong decision historically of just buying cheap gas from Russia to then export in China, is now finding itself in a tough place and will have to take hard decisions themselves. Asia remains a key area with 2/3 of global growth. India, strong leadership and emerging and benefiting out of the de-risking from the Western world into China. And at the same time, Japan benefiting out with some of their best company, very well positioned for green transition and energy. Key debate across, and the key buzzword across all the forum was artificial intelligence. Now a caveat. 3 years ago was the metaverse, flop. 2 years ago was crypto, fraud. This year was artificial intelligence. This is not a fraud, will not be a flop, but won't change the world. It's machine learning, and there is a big debate. It will require so much energy that currently we don't have, and all this energy requirement completely clash with the climate transition goal that we need to achieve, for the simple reason that if not, the cost of not doing it will more than outpace probably the potential benefits out of machine learning. So a clear conclusion out of what I've learned is, and we've been doing this already for a long time, study, understand machine learning, improve the efficiency, but at the same time, make sure the green transition and investing in reliable energy sources, it's the key asset because, we will need more and more energy and we'll need more and more green energy, or sustainable energy. In this, I think a resurgence of nuclear 3.0, 4.0 is inevitable. China has shortened the time of making nuclear from 10 years to less than 4. We've already deployed 36 nuclear power station, and they're accelerating fast. The UAE, more than 6 in a small area, and the rest of the world is investing aggressively in nuclear in order to create a base load plus renewable. The combination should keep providing abundant and overall cheap energy, and clearly green, or at least not CO2 emitting. Last point, impact on markets. On markets, I think the situation remains, inflation is falling fast, particularly in Europe. China remains in a balance sheet recession because of the real estate bubble. As a result, Chinese have realized they're not as rich as they were, and as a result, they're saving. So the excess industrial production in China is being exported around the world at cheaper prices. Volume around the world are falling, and prices too. So I expect a weak economic outlook for 2024 with falling inflation. Rates, we're probably going to land around 3% in Europe and around 4.5% in the US. And then we'll have to see what happens to the 50th election in 2024. That will determine the course of inflation and the course of geopolitical risk, and as a result, the course of investments and what will happen in 2025-26 to the economy. So what we do in Algebris, we invest with a 1 to 2 years horizon, maximizing cash flow. We get paid between equity and dividends and coupons on debt, mainly across the strongest and the safer financials. Financials, in our view, remain one of the safest places to be. They basically didn't take much risk. Whoever was weak blew up last year, Credit Suisse and a couple of US regional. Whoever has emerged out of it stronger, fitter, more clear,